Hi everyone. Welcome back to Founder Secrets They Don't Tell You. Fast practical session built for founders who want straight talk, smart tips, and zero jargon. Hi, my name is Namira. I'm from Aspire and I'll be your host for today. Okay.
I cannot control it. Okay.
All right. So today's topic is one that every founder eventually bumps into. Numbers that matters, accounting and tax made easy for founders. And today we have two amazing speakers. So we are Sangeeta Rajendran is joining from Osome as accounting team lead. She'll cover the accounting basics that founders actually need, the tools that automate the boring stuff, and why up-to-date books equals to investor confidence. And then we also have Sharon Tay, Group Tax Manager at Aspire. She will share her perspective on tax planning, compliance, and the report that matters most when banks, auditors, or investors come knocking. We'll wrap with a live Q&A, so do drop your questions in the Q&A box. We'll take about 4 to 5 live questions, and if we don't get yours, do not worry, but you can still book a free consultation right after the event. A little bit of quick housekeeping. This session is recorded and then we will email to you the video replay. And then do drop in your questions in the Q&A box so we don't miss them. And then lastly, there is going to be a QR code for booking consultation at the closing slide. Okay, all right. And then let's just start over. Sangeeta, over to you.
Right. Hello, everyone, and thank you for joining us today. And thank you, Namira, for the kind introduction. As you know, the title of our session today is Accounting and Tax Made Easy. And we are here for the next 15 minutes to prove that to you. Now, many founders think accounting is complicated and daunting, but the truth is, it does not have to be. If you set it up right from the start, it's actually pretty simple. So now you might be wondering, okay, what do I do? How do I make this easy for myself? As a founder, you don't need to master accounting. In the early stages, simply tracking your revenue, expenses, and cash flow is enough to understand how your business is doing. Do take note, being profitable doesn't always mean being cash positive. You could be profitable on paper but still have a negative cash flow. So always know your real cash position. Next, know how to read your financial statements. Don't fall in the trap of using these numbers only for filing purposes. The real value is using them to make smarter financial decisions. For example, if your office rent is draining your cash flow, switch to work from home and claim a part of it as a business expense. That way, you save both cash and tax. So, in short, what I'm trying to say is what you really need is the ability to interpret what the numbers mean and make timely decisions for your business. And if that still feels tough, don't worry, that's exactly where we can help you. Also, not to forget about the statutory filings. Do not miss on them because missed filings mean penalties, and I'm sure that's the last thing you want for your business. Next slide, please. Now that you know what to focus on, your next question is probably how do I stay on top of it without drowning in spreadsheets? Well, the answer is simple automation. At Awesome, we use our own accounting software called the Awesome Accounting together with Zero and integrations like Aspire to automate the boring stuff. Here's how it works. If you're using Aspire as your bank, it connects directly to our system. So your bank transactions flow automatically to our accounting software. So no more preparing manual entries in spreadsheets, which are prone to human errors. And if I may add, the real magic happens when you combine automation with an expert. And who are they? They are our accountants. They don't just reconcile the entries, they make sure everything is fully prepared and compliant with the financial reporting standards. This means faster, more accurate reporting and clearer picture of your business. Now, who wouldn't want that? I think if I'm a founder, that is what I would choose for myself. And I'm going to talk about the next main topic, which is next slide, please, which is tax filing. So even if you choose not to automate, you can't choose not to file your taxes. And that's what I'm going to talk about. This is usually where the panic sets in. But the good news is if you keep your books in order throughout the year, tax season doesn't have to be stressful. Let me break it down for you. If you're a small startup, yearly bookkeeping might be sufficient, but only if your transactions are minimal. However, if you have a high volume business, please avoid those once a year catch up session because they are costly, stressful, and prone to errors. Instead, do your bookkeeping monthly, reconcile your accounts, and keep all your invoices and receipt as it's essential for claiming tax deductions during your filing. At Awesome, we keep your books live all year depending on the accounting package you choose. So when the tax season comes, it's as easy as hitting submit. And I would also like to touch on another main topic that most founders tend to neglect, which is smart tax planning. Now, tax isn't just about filing on time, it's about planning ahead. So you can choose the best structure for your company and make use of available incentives and exemptions to minimize your tax liability. A few simple decisions can make a huge difference. For example, structuring your income wisely, like choosing between salary and director's fees, making use of the startup tax exemption or the partial tax exemption reliefs, being aware of government grants and incentives that may be applicable to your business. So instead of seeing tax as just a filing, plan wisely to minimize the amount of tax to be paid. Now, if all this sounds complex, relax. We have a dedicated tax team who will provide customized advice for your business so you can maximize every incentive and exemption available. Just reach out to us and we will take care of the rest. So, in short, with the right setup, automation, smart planning, accounting, and tax can truly be made easy. And with that, I'll hand things over to Sharon, who will dive deeper into these matters. Over to you, Sharon.
Hi everyone. Thanks, Sangeeta, for walking us through the accounting foundations. I would want to take it a step further now as a tax manager and share how I would look at the financial health for startups in Singapore and Hong Kong. So, one question we always get from founders is, what should I actually be tracking and how often? So, let's break it down. Firstly, on a weekly basis, we can focus on survival matrix, and that would be your cash balances, how much runway that gives you, and whether your customers are paying you on time. Because for early stage companies, cash is literally king. Next, on a monthly basis, that's where we track performances. And that would be your revenue versus your expenses, your gross margin, and your operating cash flow. So this would all tell you whether the business model is working for you or if the burn is creeping up. And then on a quarterly basis, we can take a wider view. We can look at compliance and strategic point of view, where you look at your full P&L, your tax filing obligations like your estimated chargeable income in Singapore, your final tax returns in Singapore, your GST, or even your profits tax in Hong Kong, and as well as your balance sheet health. So the good news here is that you don't need a full finance team to crunch these numbers for you every week. With the accounting and banking automation, you can actually pull these into simple dashboards. So that way, weekly health checks become just a 5-minute review, and monthly close stays accurate, and your quarterly reviews keep you compliant without additional surprises. Next slide, please. Next slide, please. Thank you. Okay, so now let's talk about improvement. So once you're tracking the right things, how do you actually make your company financially healthier? So there are actually 4 levers. The first lever is the revenue lever, and that is to get your cash in faster. You automate invoicing, set up reminders, and don't let your receivables drag past 60 to 90 days. Another lever would be the cost lever, and that is reviewing your recurring spend. These are things like software subscriptions, unused services, or non-deductible expenses, because every dollar saved extends your runway. Next would be the cash flow lever, and that is where we manage the timing of cash flows. We negotiate supplier terms, stretch payables when possible, and align your inflows with your outflows. And finally, one lever that's often overlooked is the tax lever. In Singapore, you can use the startup tax exemptions, partial exemptions, and you can even plan when you want to register for GST. In Hong Kong, there's a 2-tiered profits tax system, which gives you a lower rate on your first 2 million Hong Kong dollar of profits. So that is something that also involves tax planning, and it's something that you can make use on to improve the health of your company. And all of these tie in together with automation. When your banking and accounting are synced, you get real-time visibility into spending patterns and cash runway, so you can take corrective action before small issues become larger ones. Next slide, please. Next slide, please. Thank you. Okay, finally, let's talk about stakeholders. So different stakeholders care about different kinds of reports. And if you're building in Singapore or Hong Kong, you'll definitely interact with all 3 of them, which are banks, investors, and auditors. So banks would typically want to see your cash flow, your balance sheet, and evidence that you can actually service your debt. They also look for proof of compliance, for example, GST or tax filings that are submitted on time. Investors. So these people, they want to look at growth metrics. And these are your revenue and your burn rate versus your runway. But equally important, they also look at governance, which is clean tax filings and on-time reporting, because these things signal discipline and it makes you fundable. Lastly, auditors. They are the ones that go the deepest. They need your full financial statements, reconciliations, and tax computations. If you are preparing for an audit or even just due diligence, automation saves you weeks of manual cleanup because the records are already structured and up to date. So what I'm trying to say here is your numbers are not just for text. They are a language that you can use with your stakeholders. And the more automated your reporting is, the faster you can speak that language confidently, whether it's to an investor, a banker, or an auditor. So I'll hand it back to Namira to talk about the key takeaways.
All right. We get so much insight from both Sharon and Sangeeta, but I just want to summarize the key takeaways from them. I think firstly is the focus on essential numbers, and then as Sangeeta mentioned before, automate where possible, keep books current, investors notice, and then plan your taxes early to save money and stresses, and then partner with both tech and human expertise for actual best results. Leverage your tax incentives, and then last but not least, start on the right foot. Let's get compliant early. And with that, I want to wrap up on the info session, I will go through the Q&A boxes. I already see two questions here. So I think let's go through the first one. What's the best way to combine automation with an accountant? I would pass this to Sangeeta. Over to you.
All right. Thank you for the question. And wait, hold on here. So, what's the best way to combine automation with an accountant? Right. So, we have a few banks that we do partner with, and Aspire is one of it. So, if I would say what is the best way, is we do have this as one of our packages that if you're going to if you're going to sign up with accounting packages with us, it is certainly automated. All the processes and the bank transactions, if you were to go with Aspire, it would be automated, and we would assign a dedicated accountant to you who will then walk you through all the issues, accounting issues or any tax issues that that would be faced by your specific company. So I hope I answered the question, because I think the best way is actually we would be able to provide that service to you, because that's how unless you are accountant, if you have accounting background, then yes, you'll be able to reconcile it on your own, and you don't need a specific dedicated accountant for that.
All right. Thank you, Sangeeta, for sharing. I think totally makes sense. And the second one, what's the common mistake you see during tax season? I think you mentioned also about tax season, right, Sangeeta? So maybe I just pass it again to you.
All right. Thank you for the question again. The most common mistake is not keeping not keeping the invoices and the receipt of all the transactions that happen during the financial year. Because if there is no supporting documents, tax would treat that transaction as non-deductible. So that is the most common mistake that we see time and again. So I can't stress enough, if you happen to enter into a financial transaction, please keep the invoices and receipt, because without that, there's nothing that you can claim.
All right. So invoices and receipts, duly noted on that. And also we have one more questions. Are government's grants and deduction worth the paperwork? I'll pass it to Sharon.
Yes, sure. So, yes, especially in Singapore, where there are startup exemptions, R&D deductions and grants, they can actually save you some serious money. But then again, the paperwork can feel heavy. So this is where automation comes in as a plus to for the accountants to reduce the paperwork.
Okay, so basically definitely worth it, and then automation can help. Oh, we got one more questions. I'll pass it again to you, Sharon. Are there any numbers founders should check weekly?
Weekly, oh yes, of course. So I think weekly, because of the short time frame, I think the most important one would be to check on your cash balances. What are the invoices that you're expecting to come in that you need to make payment for, and also what are the cash that you are expecting to receive, and whether these would actually give you enough inflows to offset your outflows, or if you need additional funding. So cash balances is something that we need to look at, especially for early stage companies, because a lot of things are settled in cash. So that's the one important thing I would look at weekly.
All right, I think that's it. I don't see any other questions. And oh, one more. Okay, how do investors really view massive books? Sharon, you want to take this one?
Oh, of course. So if we look at the through the lens of an investor, like if the books are messy, can they really be trusted? And what are the numbers that would stand out to you if the books are not in order? So this is where founders, it's very important for founders to present a trustable set of data to investors, something that is transparent and also true to what is the real situation. Because that's if the books are messy, or if it is indicative of um, not having proper controls in the company, that really dampens the desire for the investor to really trust in the company and see where this company is going. Yeah. So messy books is a big no-no.
Messy books, big no-no. I think totally agree with that. So okay, thank you so much for all your questions, and then also big thanks to our speakers for today, Sangita and Sharon, for sharing such a clear, founder-friendly insights. A quick reminder: if we don't get your questions, or if you have more questions but also not sure, what do you want to ask? I'm sorry. Can we go to the next slide where there is going to be a QR code here? Where you can scan and book a free consultation with Osome team. And then for you to ask away all of your questions regarding your accounting, your tax, or any other else. Just to also remind us, so we are going to have upcoming webinars soon. It will be an F1 a special edition because, as you know, F1 Singapore is coming up real soon. So on behalf of Awesome and Aspire, I want to say thank you so much for joining us and see you guys at the next webinar. Bye-bye.